Guys, and as always, you're alive and blessed. Now on this course, guys, we're going to talk about how to trade liquidity on a bull market. Like I said in the previous video, even though, guys, prices on a bull market or a bearish market, I'm teaching you guys how to trade on a bull market and on a bearish market, even though price is still on a bearish market. Why? Because breakout structure and market shift is the key for any trader, because liquidity, it's there. So even though price on the overall trend is on a high market, we're gonna still be able to have a put and a call on one particular chart. Why? Because liquidity is always located below the swing low and above the swing high. So on the 15-minute time frame, for you, I'm always gonna tell you guys, for the old heads, the retailers, the long-term investors, use the 15-minute time frame. So like as always, vice versa, liquidity bottom there, guys. It's simple as that, guys. The 15-minute time frame, what you guys want to do, price is going to always respect the extreme demand zone or the demand zone. You guys see previously here, this right here was the previous supply zone, and like you see how price break past this supply zone, it disrespected this supply zone. Why? Because a lot of retailers, right, a lot of retailers will come here and they will put this short above the swing high, knowing liquidity, because every swing high will have liquidity. So what you guys will do, will put your stop loss below this supply zone and expect price to come down to the demand zone, which you're right. But guess what? You enter the trade a little bit too early, because there was another extreme zone on the top here. Then price came back down, mitigated, kick all of you retailers. Because why? It was, even though liquidity as top of a swing high, this lead to a breakout structure. So knowing you guys put your stop loss here, liquidity came up, and it's gonna always, guys, never trade a swing high. I wouldn't recommend you guys trade swing high. I would recommend you trade a breakout structure and a market shift. Why? Because price is gonna always retrace. So what you guys want to do, wait for the retrace, wait for the breakout structure to happen, confirm the breakout structure happen, and either wait for price to respect the first supply zone. If price was going to respect the supply zone, the one candlestick would have stopped in this supply. It would have never break past it, and even though it break past it, that one candlestick, the sellers would have came back down and pushed price down for a bearish, and then you guys would have entered the trade there. But since price disrespected that and formed multiple candlestick, that means price is going to go to the extreme order block, and then you guys would have take profit at demand zone. And then then after you guys take your profit, you guys know price come to the demand zone. So guess what? Either you guys would have enter here, and then, or you guys could have wait now for this candlestick here, for this candlestick to pull back here to give you an extra confirmation before not breaking the previous low. And then you guys could have come right here now on the 15-minute time frame, and you guys could have also, even though it's a bear market or bullish, I'm teaching you guys how to win regardless on both sides. So you guys could wait on this pullback to happen, wait for the market shift to happen again, and then enter here, and you got, and simple as that, you guys ride the wave. Now as a scalper, now you want to move to the 1-minute time frame. This is where the fun happens, to be honest with you. So the same thing as the 1-minute time frame, price is going to respect the extreme demand zone, the supply. Guys, always mark up your chart. Everything you see on the chart, make sure you write it down, because you don't want to miss no liquidity sweep, guys. Because right here we have a breakout structure. Like I said, price retrace. See that the breakout structure happened here, price went up, came back down, came back, another breakout structure happened, and guess what? Price came back down to this breakout structure. But even though this was a demand zone, this right here became our extreme demand zone, and look what price did. Price sweep this little liquidity here and eventually go back up. So even though you guys see how price went up on a bearish trend or a bullish, you guys could do either one, guys. Either one. You guys could really trade, because this is scalper. You're in and out. You're not holding the trade long. So every time price make a breakout structure, you enter the trade and you ride at a demand zone. But I wouldn't take profit at extreme profit. My fault. I would not take profit at extreme. I would take profit at the first supply zone, because price could have respect this supply zone and eventually came back down. As a scalper, as a intraday trader, then I would take my profit there maybe. But as a quick trader, I'm in and out the trade there. And then you guys could also put a next one right here for a short, and you guys could have put your short. See the breakout structure happen here, wait for the pullback, and the supply zone right here, you guys could have put your next stop loss below, above the supply level, and take it to the demand zone. Guys, it's easy as that, guys. It's simple as that. As always, hope this video find you guys helpful and impactful. As always, stay blessed and mind your business.